There seems to be a lot of confusion about the difference between a deposit versus a down payment. So that's what I'm going to talk about today. When you buy a house or a condo in Ontario, you have to pay a deposit within 24 hours or one business day of your offer to purchase being accepted by the sellers. The purpose of a deposit is of a legal nature in order to have a legally binding contract or agreement. Usually, the buyer will pay the deposit to the seller's real estate brokerage to be put in their trust account, or it can be paid to the seller's lawyer in trust. This deposit amount will be deducted from the purchase price upon the closing date. The deposit is not paid directly to the seller. Alternatively, a down payment is an amount required by a lender or a bank for you to pay upon the closing of your transaction if you're getting a mortgage. The down payment is paid to the lender or the bank and applied to the purchase price, which reduces the overall amount of the mortgage that you're borrowing. The minimum down payment required by the lender or the bank is often a percentage of the purchase price, such as 5% or 10%. However, it can ultimately be any fixed amount that you want as long as it meets the minimum requirements that are required by the lender or the bank. So if you were to buy, let's say, an $800,000 property and you have $95,000 to put down as a down payment, that amount is neither 5% or 10% exactly, but as long as it's greater than the minimum required, then it's acceptable. The bank won't lend out a mortgage of 100% of the purchase price, or what they call 100% loan to value. If you bought a house for $800,000 and the bank gave you the full $800,000, then it would be too risky for the bank if the real estate market went down and then if they had problems collecting mortgage payments from you. Just in case someone loses their job and can't pay their mortgage, the bank wants to know that if they ever had to force power of sale to collect their money, that the property is worth at least as much as what is owed. So the minimum down payment acts as a safety buffer, if you will, for the banks or the lenders. Now keep in mind that if you're paying a down payment of less than 25% of the purchase price, you are also required to get an insured mortgage. Basically, the mortgage insurers will charge an upfront fee to insure the mortgage. Insurance is only mandatory on what they call high ratio mortgages, which have lower down payments. Down payments lower than 25%. So if you are putting down 25% or more of the purchase price as your down payment, you do not have to have mortgage insurance. And your bank or your mortgage broker will deal with that for you as part of the lending process. Now, if you want to know more about down payments or deposits, you can always email me or call me at any time. And remember, when it comes to real estate or any other experience or process in life, if there was a better way, wouldn't you at least want to know about it? And if you have any questions about buying or selling, about mortgages, down payments, investing, deposits, the real estate market, selling a matrimonial home and divorce, or anything else real estate related, just email me or call me with any of your questions. You can email me at mike@TheREguy.ca. It's always strictly confidential and there's never any pressure or obligation. I just love to talk real estate and I love to help. Thanks for watching.